that. We'll keep track of that story. It's again a huge underperformer in an underperforming sector. It is perhaps a big laggard even in there. By the way, the market is, it's not as if, as I said, it's given up most of those gains which it had accumulated in the last 30 minutes, but we'll see. 18,679, 18,680 or so is where the Nifty is at. Dinshaw Irani is joining us now. He's Chief Investment Officer at Helios Capital India. Dinshaw, pleasure. Great to have you with us here on CNBC. Appreciate it. Slow and steady, but steady the market is. Accumulating gains, 40, 50 points every day. There is a fair bit of rotation. Some constants like Reliance over the last couple of days. How are you feeling about near-term prospects, Dinshaw? New all-time highs, by the way.
Thank you, Prashant, for having me on your show. And frankly, our call has been that probably from here on, the market should be taking a breather because as we've been pointing it out, and you guys also have been pointing out regularly, that we've probably been the best performing market in the world, forget the region, in dollar terms, though we're down some 10-11% dollar terms. Of the fact is that other markets are down 25-30% or as such, and the outperformance has been purely because of the fact that we've managed the inflation very well, and the other markets have had their own set of problems, like a China, its own set, or a Korea or a Taiwan, and these markets are having their own sets of problems. And India, frankly, hasn't had a problem at all. And in fact, if anything, the quarterly numbers that came out recently, the headline numbers weren't that exciting. But if you dig a bit deeper and remove the energy companies and probably some commodity companies, the growth has been phenomenal in their mid-20s as such, the earnings growth. So that has helped the market prop up, but that's as much as you can swim against the tide. Ultimately, you'll tire out, and that's what's happening. I mean, the flows are pretty okay till now, but the fact is that ultimately people will stand up and say India has done very well, and it might as well wait on that country rather than moving in quickly. So our feel is that for India to further rally from here, you will need to see the other markets stabilizing, and that doesn't look like happening in the next couple of quarters. So that's why we believe it's going to be a breather, maybe a flatlining from here on.
All right. Afternoon, Dinshaw. Thanks so much for speaking to us here on CNBC-TV18. Well, the globe clearly is in a bit of a tizzy. And you're saying that you rather stick to the domestic themes rather than go overseas or go to the global exposing companies. One such sector will be the IT space. I recall somewhere in the middle of 2022, you all had some exposure to one mid-cap stock, which is now a larger cap because the entities have merged. That's L&T Mindtree. You all are totally out of IT now? No exposure whatsoever?
So it's zero, Nigel. We are totally out of IT, and our feel is that since we've seen the sector for a very long time, our feel is that the managements call out what they see immediately. But if you look at the factors that were reported during the recent quarter, already the commentaries are becoming cautious, right? I mean, they're already pointing out certain industries where there's caution creeping in, discretionary spends are going away. But even if you look at the various parameters that you normally track in an IT company, the utilization ratios are moving up. They're trying to utilize more and more of their bench. The bench is getting compressed. The bigger deals are getting prolonged. I mean, there's no closure happening on those deals. Then obviously subcontract costs are coming off. They're looking at more and more in-house and cutting off that. So that's another area that is a highlight here. Price negotiations are not going through. So it's obvious that there is some amount of slowdown that they're also looking at in the future. I think the call out will more or less be with the December quarter, because that's when the visibility for the next year will come through. So till now, they've been executing the contracts that were there already in their books. But even though the discretionary spends are going away, I think the call out will be in the middle, at the end of this December quarter, once they come out with their numbers, probably by the middle of Jan. I think that's when you'll see some kind of a reaction in the IT stocks, mainly because they're already at some 35-40% premiums to their pre-COVID levels, and we don't expect the growth rates to be more or less different. I mean, slightly more higher than the pre-COVID levels, nothing beyond that.
Dinshaw, afternoon. So if the markets are likely to consolidate, pause from here on, would you recommend, or are you trying to do any tactical reallocation of the portfolio? Any ins, any outs? that you would recommend to make that extra money?
So, okay, the out was mainly the extra, as Nigel pointed out, and the external facing sectors is where we moved out. I mean, the export-oriented companies and all, because we don't expect the global markets to stabilize in a while. But if you're looking at the domestic consumption stories, here again, we are very cautious. We are basically looking at any correction to get into the company per se. In fact, if you rebalance, I mean, we've done some rebalancing of the portfolio. We already have some 4.5% of cash with us as of today. But the fact is that we're not in a rush to deploy that cash. That itself shows that how cautious we are going forward. So that very, and in fact, one more thing that we've done is, if any new client comes in today, we tell him to stagger his inflows to us. In fact, we try to stagger it out over 4 or 5 months as such, so that we can average out the flows per se. But one more thing, whenever the markets flatlines, it gives immense opportunities for stock pickers to come and pick their stocks, study them well, and then build up their positions. I think that's what's helping us out in a way.
By the way, the market's made a new high. I mean, what the last 40 minutes it has been. First a 30-40 point surge, then a 30-40 point sell-off, and now there is a fresh round of buying which is coming through in specific names. I'll tell you which ones, but where it's 18,728, which means we're up 110 points now. That is the surge. Pretty much all of the moves have happened. Incremental moves have happened at starting about 225 or so, and this is the latest one which is coming through. Let's have Reliance Industries, the intraday. That is seen a surge. I think on the intraday you'll be able to see that. That one has come up and helped the market last few sessions in the last hour. HUL, like yesterday, I mean, FMCG was the top performing sector. HUL is also pulled up a little bit. And then the HDFC Twins, sharp move on HUL. There you go. HUL is adding about 12 index points to the Nifty. And then HDFC and HDFC Bank, between them, another 20 points on the Nifty right now. So that's the bulk of the move that we're seeing. Actually, let's have a look at ICICI Bank as well. That is a big surge on ICICI Bank. You know, from 945 kind of levels to about 953, and I'm talking about last 4-5 minutes or so on ICICI Bank as well. So 116 points now. So this is coming in very nicely. Dinshaw, you know, you own names like Campus Footwear, which after results has corrected. Are you accumulating more? Has the thesis changed, or this is just temporary in your opinion?
So it's just temporary in our opinion, frankly, Prashant, because the fact is that it was the raw materials which created havoc, and obviously in one quarter with this kind of a surge in the raw material prices, they could pass on to their end consumers. But the price points are pretty sticky price points, so that's why it shouldn't be a problem for them to do that going forward. And you'll already see, probably this quarter again, you may see some kind of a slight uncertainty. Maybe the margin will maintain. But the fact is, going forward, this will definitely be passed on. So we look at such opportunities to build up our positions. Also, as I said, that flatlining is what helps us in a way, and that's what we've been doing in not only in Campus but other stocks also, where there may have been some correction.
Dinshaw, pleasure speaking with you. Thank you very much for joining in. We've got to shift our